I think we are still seeing the evolution of this crisis. We're still expecting the peak in this disease to hit in the next couple of weeks. We're still seeing economic numbers decline, unemployment numbers increase, and stock market numbers have been very volatile. Mohammed Al-Arian was saying on Squawk Box this morning that he thought it was premature to think that the bottom was in. He wouldn't even go as far as to say that we were in a bottoming pattern yet. So in that wait-and-see, data-dependent mode, I think you have to say, the risks out there look like the herd mentality, if you will, that groupthink that seems to be expecting a peak and a recovery and everything to work nicely. When things don't work nicely and when the group gets disappointed on Wall Street, the group sells, and you don't want to get caught buying in front of that.
Well, like Mohammed, you say you're not convinced that we're in a bottoming pattern just yet, but you also say to choose companies that can endure, not just for a couple of months, but for a couple of years. What kinds of companies or names of companies would be on your short list?
Right. I think you have to, in these times, think about what successful investors do, which is they don't panic. They are greedy when others are fearful. They buy low and they sell high. So you think like Warren Buffett a little bit. Things are going on sale, but more defensive names that are going to get through difficult periods. The Pepsi-Colas of the world, the Johnson & Johnsons, the Procter & Gamble's, where people are still going to be buying chips, where people are still, of course, going to be using Johnson & Johnson's products. Certainly Abbott Labs is another one. Microsoft, companies with great balance sheets, not too much debt, very high-quality companies that have cash flow. And stay away from those more speculative companies. The most difficult thing that I have to do, 33 years of doing this through 1987 and 9/11 and certainly the financial crisis, is to counsel individual investors not to panic, not to make those emotional decisions that always get them in the neck in the end. If you have a long-term view, if you're a long-term investor, you can stay with that quality, you can endure, and you stay away from those emotional decisions, and then you have some dry powder so that when things do go down, like Warren Buffett, you can be opportunistic and you can take advantage of some of these fabulous world-class companies when they go on sale.